Do you wonder why when you enter the market goes in the wrong direction? You might be a Fomo trader without even realizing it. In this video, I'm going to explain to y'all the 4 market cycles when it comes to trading that you should know about. There are 4 market cycles in the market. We got the accumulation phase, markup, distribution, and then markdown. The first thing we're going to go over is the accumulation phase. This phase happens after a long time of sell-off and downtrends. During this time, the market bottoms, but like I said, it's low volume, but it's a lot of consolidation. This happens after the downtrend. This is a great time to do research to get in good companies to invest in, because this is when all the early investors get in. All the early adopters that did their research, this is when they gonna get into the market during the accumulation phase. For example, me, I'm getting all my shares up for Apple. I believe we're in the accumulation phase now. After we done had a whole year straight downtrend, so I'm buying all my Bitcoin, I'm buying all my Apple, getting ready for the future. All right, so this is a chart, Bitcoin on a weekly chart, and I'm gonna draw a box around the accumulation phase just so I can give y'all a quick example. This right here will be the accumulation phase. Just like that, you see, this little line has been consolidating. This is the highest it went, and this is the lowest went. And right after that, it took off to the upside. That's how I said this one. Early adopters get in. The market bottoms during this time also. You just gotta get in the right time. But see, like this little 3,800 line was like the long time accumulation bottom. So that would be your time to get in. But then right after that, it broke out to the upside. Now, after the accumulation phase, we got the markup phase. This phase is mainly in the uptrend, as I showed y'all on the example. Investors are deciding when to hop in. This phase is where the retail investors and new traders enter the market. Cause like I said, all the good investors, they got in the market during the accumulation phase because they knew it was consolidating, had low volume, so it's gonna take off eventually. That's why the good traders got in. Smart money concepts, that's when all the smart money concepts got in as well. So the trading volume increases during the markup phase drastically, causing FOMO and greed. FOMO means fear of missing out. This is what I mean by the new traders. When they hear about a meme coin and crypto, where everybody buy it for no fucking reason, that is FOMO, fear of missing out. That also brings greed. Greed is when you making money in the market, we like, you know what, I want to make 1,000% on it to keep on going up. So you keep on buying it for no reason. It could be overbought. Your indicators could be the total opposite. You just keep on buying and holding because you think the price gonna keep going up. That is an example of greed. You know we in the market because it's higher highs and higher lows. The market phase is nothing but basically an uptrend, and it's all about when the new investors want to get into the market because they don't know for sure we are out the accumulation phase. It's all about psychology when it comes to the market phase. The investors don't know when to get in the market because we've been in the accumulation phase for so long. They don't believe we out of it. So like I said, if you get in the market during the accumulation phase, you just hold off and wait. You'll be good when it comes back to the market phase. Alright, so this is the market phase right here. I say the market phase is right after it got out of the accumulation phase and went up. Yeah, there's a slight pullback, but then it continued to go higher. This is what I would call the market phase. It's during just a whole bunch of long uptrend. This is the weekly time frame. So it went up from October 2020 all the way to down February 2021. This is what you would call the market phase. Now we to the distribution phase. After the uptrend, this phase just consolidates. This happens after the long uptrend. So after the market phase, it's nothing but distribution. Everything goes slow down. Trading volume still up, but they don't know they want to push the price higher, or they don't know they want to push it a little bit lower. During this phase, this is when like all the uptrend, it just stops. You know what I'm saying? People think it's gonna go higher, but the sellers re-enter the market and start pushing the price down. So really just nothing but a choppy market in this time frame. The volume is still high, but the trend is just undecided. Alright, so an example of the distribution phase would be this right here. Bitcoin, this is the weekly, and this was right here with just the markup. So I'm just gonna take that off. And now we're just gonna graph the distribution phase. I believe the distribution phase would be like right here. These couple of weeks of consolidation, this is what you would call your distribution phase. Cause it went up real high right here, then it just came crashing down back into the zone. So it was in the distribution phase from February 2021 all the way to May 2021. So yeah, that's a couple of months of just up down price action. Now we to our final phase and the mark down phase. This is the scariest phase for any traders in the market, especially if you don't know how to bet on the price going down. The markup phase is when greed and Fomo completely lead the market. Everybody expect the price to go down, nothing but sellers into the market. It's gonna be nothing but rapid sell-offs occur during the markdown phase. All the early investors, late investors, new investors, they all start to hop out randomly during this market. Alright, so sellers take over the market. They trap the late buyers who bought late. So what I mean by that, for the people that bought during the distribution phase that think the price gonna go up, they trap them. They was gonna buy a whole time the price gonna keep on going down and it ain't coming back up no time soon. And during this phase you can constantly see lower highs and lower lows because we're in a downtrend. And the best way to trade during this market is to do put options and to short everything. Like that's what I did. I've been shorting Bitcoin, shorting crypto, shoot Forex a little bit different, but crypto and stocks correlate, so I've been shorting them. And I've been doing pretty well. Alright, so the markets go from accumulation to markup to distribution phase, then to markdown. Accumulation phase is when the market bottoms. This is the best time to buy. Markup phase is when there's constant uptrends, greed and Fomo enters the market. Greed is when people just keep on buying something for no reason, buying and holding because they think the price gonna keep on going up. Fomo is fear of missing out. That's when everybody keeps on buying because they think the price gonna keep going up too. They don't want to miss out on the opportunities. Then we got distribution. Distribution happens after the uptrend and price action is very choppy. Then after that, we got markdown. Markdown when sellers take over, straight lower highs and downtrends, constant downtrend. We already know, man. It's your boy K2, man. We out this bitch, man. Like, subscribe, for sure.